Hey, my name is Darius Kraucionis, and welcome back to Founders Unchained, the show where we sit down with builders, founders, innovators, and also investors, the show where we discuss how to build startups from scratch. Today we have a special guest, Mike, who is the founder and CEO of Web3 Growth Hub. And it's really a pleasure to meet you. Thanks for joining this episode. For the people who don't know you, can you just introduce yourself, give us a little bit of information about your background, what you do, who you are, and what your business does? And the most important thing is, how your business can help startups.
Yeah, absolutely. Darius, great to be here. Great to be on the show. Thank you so much for having me. As you said, I'm the founder and CEO of Web3 Growth Hub. My name is Mike, and traditionally I come from a investment brokerage background. So I built my career in London for about 10 years. I used to run my own investment brokerage outside of Web3, helping normal traditional companies to raise capital, to unlock revenue, and to grow their business. I got into Web3, crypto, blockchain back in 2019, investing as most of us do, chasing those gains. I got involved in some early ICOs. And then back in 2023, I wanted to work in the industry. I wanted to work in the hood. I wanted to see kind of how projects build, scale, grow. So I got a position as head of growth at a crypto marketing agency. Did phenomenally well, generated millions of dollars in new revenue for the business, grew, built a network, built a connection, worked with some incredible brands like Hedera, Arbitrum, Polygon, etc. And back in July 2025, I founded Web3 Growth Hub. The whole idea of founding Web3 Growth Hub was essentially to help startups and scale ups in the Web3 world to unlock revenue, to find capital, to find opportunities to grow. And that's fundamentally what we do at Web3 Growth Hub. We look at projects and we go, where is the opportunity for you to grow? Where is the opportunity for you to unlock revenue? Where is the opportunity for you to unlock more capital and essentially take your business, take your project to a whole new level of growth? So really excited to be here with you, Darius, today. Really excited to share some of the alpha that we do at Web3 Growth Hub. And yeah, I think it's going to be a beautiful conversation.
You was mentioning investment brokerage, and I really would like to understand, what was the start when you started with that? And maybe you can share also some interesting experiences for people who will be watching this. What kind of experience you got actually, how many startups you helped? If that was like fundraising for the startups, how it went at that moment when you started this, and how the market changed comparing with now.
Traditionally, before I got into crypto, I used to work with companies in London, all over the world actually, but traditionally London. And we used to essentially find investors for them, foreign investors, local investors. When I got into crypto, when I got into Web3, what I noticed was so interesting. Back in 2020, 2021, there was a lot of VC money pouring into crypto. I think any project, if they had a decent idea, they were able to raise a couple of 100,000, they were able to raise a couple of millions, and it was a pretty easy, let's say, fundraising process. What I noticed in 2025 was the game changed dramatically. I think, there's been such a concept in Web3 about building infrastructure, building the platform for us to scale, that changes the way that VCs, the way that investors look at investing. And fundamentally, what I noticed is that so many of the VCs, so many of the investors in crypto and Web3, they're looking for, let's say, real traction. And real traction, actually, in the real world, what that means is that means capital, that means revenue, that means having figures like, for example, MRR, monthly recurring revenue, or ARR, annual recurring revenue, which in crypto and Web3 is almost like alien language. It's almost like, what are we talking about revenue? But actually, what I'm noticing is more and more that is part of the fundamental criteria that investors are looking for before coming into a project. And what that made us do back in 2025, last year, was that made us really look at, okay, where is the opportunity for Web3 projects to scale up? Where can they find capital? Where can they find opportunities to grow? Where can they actually grow their project? Not on the model of 2021, because that model is dried up, but on the new current model. And the reality is, fundamentally, there's only, let's say, three ways that a project can raise in Web3 at the moment. Number one, I think it's through the community. So you see projects still raised through their community. You see projects still raised through, let's say, a private sale or something like that. I think the concept of that type of fundraising, you need a lot of budget. You need budget up front. You need to know what you're doing because you're going to burn a lot of capital just trialing and error. So I think marketing, fundraising still works in Web3, still works in crypto, but you need to have certain things in your favor. So The second way is very much through the grants and the foundations. And this is kind of our bread and butter at Web3 Growth Hub. We're connected to about 100 plus of the foundations. And really what we do for our projects is we run the grants fundraising process. So we research, we submit, we fill in grants on their behalf. We then run the entire process of communicating with the foundation. And, we unlock around 200,000, 500,000 in revenue. It's tougher at the moment because a lot of the foundations they're really scrutinizing the grants. They really want to see what the money is going to be used for. But in a way, we think that's a good thing because it kind of qualifies who's really serious and who's just here for a quick pump and dump sort of thing. So the foundation's grant process is really, really incredible because I think what's powerful about it, number one, is you get some capital, right? So if you're a project founder, if you're building, if you're scaling, you get into a foundation, you get some capital. That's nice. But actually, number two, the biggest benefit is the capital is undiluted. So you're not giving up part of your business, you're not giving up tokens, you're literally getting the capital, which I think leads into the third benefit, which is the foundations. They want your project to be successful. I think in the past, we've seen a lot of VCs dump on their projects, right? Because they want to get their gains, they want to get their ROI. The foundation they have a different objective. Their objective is if your project is successful in the medium, short term, long term, they are going to be successful as well. So they really push the projects to grow and to be successful. The last way that we focus in terms of helping our projects, and exactly the concept, unlock capital, unlock revenue, grow sustainably, is by actively doing the business developments for them to unlock high revenue opportunities. When you look at doing business development in Web3, and this is something that I love about the industry, and I also think that there's a huge opportunity. I think Web3 as an industry is going through a process where it's becoming a little bit cowboy land, and now it's becoming much more, let's say, structured and serious and grown up in a way. And I think this impacts massively how projects do business development. We've worked with some projects, just to give you a very quick example, and then I'll wrap up on this. We've worked with some projects where, we've ran an initial BD process for them and we've unlocked opportunities of, let's say, 100K, 120K. But just because you're doing the business development in a higher level conversation, you're getting into the right rooms, you're connecting with the right people, we've had proposals that go from 120,000 to they flip to becoming $250,000 deals, for 5 years running. I think this is something that a lot of founders are sleeping on, and it's the opportunity to do business development B2B with other projects to offer your service, to offer value. And in that process of value chain, you unlock huge, huge amounts of revenue. It's really exciting because that's kind of where Web3 is going. It's just a lot of founders are still playing just the marketing game. Yeah, this year is going to be a really, really exciting year.
I really love what you do because I really feel that this is very, very needed in the market. And what I recently noticed also, as you said, that there are a bunch of companies who are understanding the value of partnerships between the companies. And basically, this is how we can help each other by trying to develop a partnership instead of, competing. By the way, Mike, is that Web3 space, is it your first initial industry where we've been focused for many years, or you also have some experience working with fintech companies, let's say in fintech industry?
Yeah, it's interesting. Actually, my background is totally outside of Web3. Like I said, I got into Web3 in 2019, but I run a separate business called Hypergrowth, where we work with industries in fintech, in AI, in all over the world. We're actually based in Dubai in that business as well. Again, in that business, we're helping companies with business development, with lead generation. Unlocking revenue is the key thing that we focus on, right? It's interesting. We're seeing a bit of a blend at the moment. I'm sure you're seeing it as well between AI, Web3, fintech, all coming together. Actually, one of the things we're looking to do at Web3 Growth Hub is looking to work with Web3 projects or Web3 companies looking to target that fintech AI world that's perhaps slightly outside of Web3. And you're seeing a lot of companies looking to do this at the moment. So tokenization, RWAs, stable coins, they're looking to target more of the, let's say, the Web2 kind of companies. And this is one of the key areas we're looking to really focus on.
Web2 space currently is chasing for Web3 concepts. So I noticed that there are a bunch of companies who are very targeted towards Web2 companies and offering them the new concepts, how we can use blockchain technology and we can implement this into Web2, and then how to scale the business using benefits of Web3. So I think you are in really good, interesting position right now. And you are absolutely right that fintech companies and AI companies, we're always looking for new utility cases, how we can use Web3 to grow a business, extend expand it, scale it, and grab a nice piece of crypto market, let's say, because we're a bunch of users who are willing to use new services, new technologies, and new innovations. Let's touch the part which is related to revenue. In the free industry, we're a bunch of companies who are still not sustainable businesses. The revenue, this is something what we're looking for. It's important maybe to go into the details to that part. If you can help companies to build the whole strategy, how to get revenues to the business, I think this is important topic to discuss. Maybe you have some tactics or strategies what can be
Yeah.
implemented. I think it's worth to share it.
Yeah, let's talk about that, Darius, because that's such a, like you said, it's such an important part of how the industry is growing and scaling, right? I think when you look at Web3 or any industry, any tech industry historically, right? You look at the internet, we had the dot-com boom, we had the time when the internet came out and people were like, oh, the internet's never going to work, you know? I watched a fascinating documentary the other day, how people thought email was going to be a scam. You know, when you think about it, before email, we used to send people letters, right? Like postcard letters, faxes. There was no email. What was email? And what we saw in those industries is we saw the kind of, once adoption was accepted, we saw revenue models being born out of the internet, right? E-commerce, people making money through email businesses, people making money online, etc., etc., etc. But I think the core fundamentals of any business, whether it's digital, whether it's online, whether it's offline, you know, it could even be your local barbershop. The key fundamental is I've got a product or a service that I offer to someone else, and that someone else is willing to pay me for that product or service. I think what we saw in crypto, what we've seen in crypto, I mean, Bitcoin is what, 16, 17 years old, right? So as a technology, it's not that old. And I think what we saw in the last 16, 17 years is kind of this huge interest in crypto. We saw a lot of early players coming in and making huge opportunities based on hype, based on hopium, based on predictions of who knows what. But fundamentally, when you think about the offering of crypto, when you think about the offering of the business, there was no underlying value to anyone else. Okay, I'm offering Darius this service because, you know, it benefits him and he's going to pay me for that product or service. We're seeing that change. And I think where the change is going to be, we've seen a lot of crypto projects, businesses historically, they are targeting the B2C crowds. They're targeting retail. They're trying to bring in more users. They're trying to bring in more retail customers. And very few of those brands have been able to pivot from the online into a real business. I think probably for one of the most successful projects that I've seen do this is Pudgy Penguins. Pudgy Penguins, they started as an initial promise of a penguin. They built an incredible community. They spent millions of dollars, and they've translated that now into the real world where they have shops, they have merch, etc. They have a revenue model. They have a business model. I mean, they spent millions of dollars. They had a lot of time. They also caught the market at the right time. A lot of things went into their favor. I personally think that model's broken. I don't think that model works anymore. I think it's very, very hard for the brands to replicate. But here's the thing that's interesting. At the moment, when you look at Web3, when you look at the landscape, there is money in the market. Even though the market's crashing, even though a lot of things, you know, there's some of these chains. For example, we work very closely with Zero G. We work very closely with Arbitrum. We work very closely with Polygon, with Starknet, with so many others. And these chains are sitting on millions of dollars in treasury. And they are looking to somehow increase their transaction volume. They're looking to increase their user base. They're looking to increase their liquidity. And what we're starting to see in Web3 is projects that can offer a value or a service to another product, to another project. We're starting to see a business to business, almost B2B SaaS model type of sales, right? If you think about it in the traditional world, if you've got a software or if you've got a tech or if you have an app, how do you scale the revenue of that app? A lot of times the way you do it is business to business through a SaaS model rollout, meaning you target other players that are working with your target audience and you pitch them on a strategic partnership where you're going to add value to them, they're going to add value to their users, and you're going to get a piece of that pie as well. And I'll give you an example of this. One of the projects that we work with, they're an AI gaming project called Tings. They're based out of Solana in Germany. And what we did was we started working with them. We started helping them with their business development, trying to unlock revenue opportunities. And fundamentally, what they do is they help other projects to retain their community. They help other projects to have better community engagement, and they help projects to essentially set up a game within their community to just keep their community more alive, right? So a really, really fantastic service, a really, really fantastic product. But who is their target audience? Their target audience is not retail. Their target audience is other projects, other businesses. It's B2B. So what we did was we introduced them into Zero G. Zero G is a really successful AI layer one. We're also ambassadors with Zero G. They raised a bit of money through Zero G, which was fantastic. We introduced them into Polygon. They raised some money there. We introduced them into Ton. They're now doing a distribution campaign with Ton. But what was interesting out of Zero G have started introducing things to projects within the Zero G ecosystem so that things can sell them the products and service that they're offering. And now they're generating, thousands of dollars on a monthly revenue basis because they're offering a product and a service to other projects where there is a value add, right? And I think a lot of founders are sleeping on this. A lot of founders, when they look at their business model, they go, okay, I need to attract more users. I need to attract more retail. I need to attract more liquidity. Yes, you need to do all of that. Tick, 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 tick. But actually, the sleeping gold mine opportunity is to think which other businesses, which other projects in Web3 can I add value to, and then go and pitch them, go and source them. One of the projects that we worked with, when we started working with them, we had the same conversation with them. We said, look, who's your target market? Who's going to unlock revenue for you? Who are the people you want to target? And they mentioned a few customers they had, and they had about 3 to 4 customers. And we said, brother, if we could help you get 20 customers, your revenue goes through the roof, right?
Yeah.
And for them, it was a bit of a gold mine. It was a bit of a light bulb moment. They were like, actually, you're very true. We have 5 customers. We're making X amount of dollars per month. If you could help us bring in another, 15, 20 clients, our revenue goes through the roof. And actually, we don't even need to worry that much about retail because the retail will come through the partnerships. The retail will come through the BD. The retail will come by doing those deals. And so, yeah, we worked with them for about 4 or 5 months. We got them up to just under 20 new clients, and their revenue, their pipeline, went through the roof. The project really grew. And I think for a lot of projects, it's a real hack because I'll give you an example. Last thing I want to say on this, right? For you to do a successful, let's say, B2C marketing campaign in Web3, like a retail marketing campaign, you're going to need to spend at least probably 20, 30, 40, $50,000, maybe way more. Whereas to do a really successful B2B unlock revenue capital campaign, let's say 3 months, 4 months, you're probably going to spend 20,000, right? You're probably going to spend about $20,000. And actually the revenue you're going to unlock from that, I would challenge is going to be way higher. And the reason I would challenge it's going to be way higher is because it's going to be a lot more sustainable. Because where you're putting the money is you're putting the money in partnerships. And those partnerships, as long as you manage them and as long as you look after them, they keep feeding your pipeline, they keep feeding your revenue, and they keep feeding your project, right? So I think this angle of B2B revenue unlock is a really powerful gold mine for a lot of projects and a lot of founders in the Web3 space at the moment.
When I'm looking to foundations, let's say, or companies like Arbitrum, I think those are the companies who are really good foundation for startups to be in and use the main values what we can bring. So it's not just only grants, but it's also like ecosystem on its own, what it can bring to the startup, and it's just up to the startups. Do we take this or not? And I'm really happy that there are companies like yours which are helping to connect startups with those, let's say, foundations. And this is really good strategy how to utilize all
Yeah,
the players who are in that ecosystem.
the thing about the foundations, which is really interesting, right, is they have liquidity, right? They have money, they have capital, they have community, they have requirements. Like one of our projects, I'll give you an example. In January, we raised nearly 800,000 across the foundations for different projects, right? Nearly $800,000 in January, which is a bad month. Like it was really quiet, it was really everything, right? One of our projects, they raised through Arbitrum a grant for 90% of their tier 1 audit. So this is the interesting thing that a lot of founders don't understand is that the foundations, they are looking to attract certain types of projects, number one. Number two, they have grants for certain things. So for example, you could be a builder thinking, oh, I'm struggling with my tech stack. No problem. There is grants out there that will help you build your tech stack. Or maybe you're struggling with the marketing. No problem. There's grants out there that will help you drive the marketing. Or maybe you're struggling in terms of you want to get a tier one audit for your project, like in the case of the project we just raised for. And there are foundations out there that will help you get those costs covered, right? So I think that what I love about the concept of the foundations, it's a bit tricky. It's a lot of work. It's a lot of communication. It's a lot of back and forth. But actually, once you get into the table, once you're in the room, once you're having that conversation, the foundations have everything you need in order to be successful. They also have what we found, which is really interesting. The foundations like, for example, Hedera or a Zero G or a Starknet or all of these foundations, they have three major arms. They have the foundation arm, which does grants. These guys do the grants, they do that kind of funding. But they also have a VC arm, they have a venture capital arm, all of them. And they also have an enterprise deals arm. And this is really fascinating because once you get in on the grant side, I'm having a conversation with Darius at Polygon and we're talking. But if he likes my project, he will introduce me to the VC side of the business, and he will also introduce me to the enterprise side of the business. We have so many of our projects that have been introduced to either side because once they're in the conversation, once they're having that talk in the room, something sparks, right? There's a moment where you can talk about the next step, and that is a magic which a lot of founders don't know because they've never been in that situation. So
Okay.
it's really powerful.
So, Mike, let's say I'm a startup founder and I'm
Yeah.
building something in Web3. And just for example, how I should know which foundation or which, let's say, blockchain as a partner for me is the best. Because,
Yeah.
as I understand, when you receive a grant, one of the requirements of this foundation, let's say, is that you are staying in the ecosystem. And it limits myself to work with other foundations too or not.
It's a great question, by the way. Thank you so much. It's a huge misconception in the market, right? That, for example, okay, if I go into Arbitrum and they offer me a grant, I'm just building on Arbitrum. Wrong. Actually, what the big word is in the Web3 with the chains, with the foundations, is the concept of interoperability, right? They all want cross-chain activity. They all want cross-chain users. They all want cross-chain liquidity, right? So actually, every now and again, we get a grant proposal where, okay, this part of the project has to be exclusive to this chain for a period of time, maybe 3 months, maybe 6 months, something like that. But we've never, and it's fascinating, we have never seen a grant proposal that is building exclusively on the chain. Because actually, yes, the chains want to attract the best projects. Yes, the chains are looking for the next unicorn. But actually, the chains also understand that if you're building on Solana, actually, you should also be building on Polygon. You should also be building on Arbitrum. And if they can support that, then it brings the whole ecosystem together much more strong.
Okay.
It's a really, really interesting question that you raised. And the reality is, cross chain is the way to go.
Okay, so basically what it means that me as a startup founder, let's say, I can go to multiple, entities and I can get multiple grants, and overall it can even collect for me even 1 million. I'm not saying that this is like capital raise, but it's like grants, which is money for free. Maybe it might be a good strategy for many startups, just to get the initial ignition.
And I'll give you an example of a project that we raised with, just so that the listeners to this podcast can kind of understand the process, right? There was a beautiful project that we worked with called Scenium. They're an RWA project based out of Toronto, Canada. And what they're doing is they're tokenizing real estate in Brazil, in South America, and they're offering it to investors worldwide, right? So an incredible opportunity to the Latin American community, an incredible opportunity to investors outside of that. And so they were really struggling in the beginning to pick up traction, to get things moving, to just get their message out there, right? So what we did was we connected them into Hedera. We got them a grant into Hedera, which is one of the biggest ecosystems in terms of RWA tokenization in the space. Off the back of that Hedera grant, we got them into another chain called XDC. So they started building on that. Now, once they had those two ecosystems in their project, funding them, working with them, building with them, what we then did is we went, okay, so we've got these two credibility, right? We've got the stamp of credibility from Hedera, from XDC, big players, big players. Who now has the next wave of capital for the project? So what we did was we went, well, who's going to give us the money? We had a bit of a strategy session, and what we decided was let's go target real estate investors. Let's go target real estate funds in Canada. We knew that some of them were interested in tokenized assets. We knew that some of them were interested in real estate being tokenized. We did a BD approach where we reached out to about 100 real estate companies in Canada, right? And out of that, we got 8 or 9 of them into having a conversation. And out of that, 8 or 9, we currently have 2 of them looking to write a check for $500,000 each into the project. So when we look at the concept of, I think there's an abundance of capital, there's an abundance of opportunity in the world, right? Web3, amplifies that massively. I think where we're in at the moment as an industry is just changing the perspective, changing how we look at it, and changing about where we unlock that capital from. Historically, the capital has always come from retail. So everybody's focused on retail. Whereas now there's this huge narrative of we have a lot of chains. I don't know how many layer ones, layer twos we have, right? We have thousands of projects. And so we don't need more of that. There's already a lot of noise in the space. And actually, the players that are going to do the best are going to be the ones that work together, collaborate together, and help each other win, right? And that is much more of a B2B play rather than a B2C play.
How the fact that I'm the startup which is generating revenue can increase my chance of successful capital raise, let's say? How that changed the fundraising conversation with investors?
Massively, right? It's really interesting because if you fundraise outside of Web3, if you're trying to raise capital for a company outside of Web3, the number one question in terms of traction that most investors will ask is they will ask for your bank records, they'll ask for your finance sheets, they'll ask for your finance records, and that will show them a traction. And the reason that shows them traction is because other people, other businesses are willing to pay for your product and service. What we saw, I think, with the boom of technology is that revenue traction became a little bit confusing, right? It became a little bit more on users. And then we saw a massive inflation of what is real users. Are they real people? Is it AI, etc., etc., etc. And what we're finding, what we're seeing, the real traction, once we get through all of the numbers, once we get through all of the hype and everything, the only real number in terms of traction that actually matters is revenue, right? Because revenue is the one that shows, okay, people are actually interested in your product, people are actually using your product, people are willing to pay for your product, right? And one of the biggest things that I think it helps so much is it's a few things. Number one, does your project need to raise capital, right? What is your goal? Like a lot of times we see founders going, I'm trying to raise 1 mil, 2 mil. Okay, great. I understand that. Why? Oh, because we need to scale, we need to do this, we need to do that. Okay, but what is the goal of the business? Like, where are you actually taking the business? And I think this is something that a lot of times founders don't really think about, right? And so that's part one. But once you've got some revenue behind you, you become so much more attractive to the next level of capital because they go, okay, well, Darius has funded this or Hedera has funded this. Okay, maybe I'm interested in getting involved, right? And even the foundations, it's so fascinating. They ask questions like, okay, well, how much liquidity is this project going to bring on chain now? If you don't have any liquidity, zero liquidity in your ecosystem, in your project, sure, you can still raise a grant, you can still unlock some opportunities, but you're not going to get the biggest opportunities. You're going to get maybe a tiny, tiny slice, a tiny, tiny opportunity. Even if you can approach a foundation going, I'm making $5,000 a month, which is nothing, right? Which is nothing. You're at least making more than someone that has a massive community but making no revenue, right? Because you have a real business case. And I think this is the fundamental concept. It's switching from project mindset to business mindset. That's a huge, huge difference.
Yeah, and I agree with that. I'm speaking with venture capitalists right now, and we say, look, please do not bring us any pre-seed deals because we're just only idea projects. And what we say, actually, we want to see at least a couple of dollars in the business gain from actual sales. Revenues just basically shows that your business idea have market fit. It's needed in the market and somebody's going to buy it. But in the same time, I was surprised when I spoke with a couple of venture capitalists in the past and I was presenting some of the deals to them. And those guys, we've been making like 1 million a year as revenue. And even this kind of revenue for some of the investors is not still enough based on their thesis. So in your practice, what kind of revenue in size, is expected from the investors to see? Can you just elaborate on this based on your experience?
Yeah, that's a great question, man. I think from what we've seen, right, it's not so much about the amount of revenue that that project is making, because you're right, we have seen deals like that as well. We've seen deals where we've shared with our VC network and there is revenue, there is traction, there is everything. But fundamentally, when you look at the business revenue model, it's not that sustainable. It's not that long term, right? Maybe, yes, the business is making $1 million in revenue, but when you think about it and where the market is going, is it going to be still making $1 million in a year's time or 2 years' time? And I know 1 year, 2 years in crypto is such a long time, but that is how VCs are now looking at the game, right? Because before, when they were investing in ICOs, when they were investing in token plays, their exit liquidity was maybe 3 months, 6 months max, right? Now their exit liquidity is 1 year, 2 years. Some of them are looking to invest for 5 years. And that really changes the landscape of how they assess the investment opportunity. Capital revenue is a big part of the metrics, yes, but they're not assessing it in terms of the size of the revenue at the moment. They're assessing it in terms of the opportunity of the marketplace, right? So, for example, you look at Tings. When we started doing deals with them, they weren't generating, hundreds of thousands of dollars. Now they're on a really good monthly run rate. They're unlocking some really big deals and they're talking to some really big VC players because now what the VCs are seeing is they're seeing that there's been a growth in capital, which is good. They're seeing that there's huge demand from the market in terms of future deals. So from a VC's perspective, they're going, right, if I invest 5 million, 10 million, couple of $1 million here, in 5 years or 3 years or 1 year, that's going to grow and that's going to be my unlock, right? And that's just the reality that every VC does the same. Even if you think about traditional VC investments, that's how they assess businesses, right? But they assess it on let's say, a longer trajectory. And that is what's happening in Web3 at the moment, right? It's just the trajectory has changed from, like I said, from 3 months, 6 months exit to now the trajectory is, okay, I'm going to invest in Darius's project. What's going to be the market demand in 1 year, in 2 years, in 3 years? And that is why we're seeing plays like infrastructure, like gaming, like AI, like RWA, like tokenizations, those being the lead narratives, right? And when we look at narratives like meme coins or, NFTs, even something like that, those narratives are on decline because, again, what is the service that's being offered to another business? What is the revenue in 1 year, 2 years, 3 years? We don't know, right? It's very much speculation. So
Yeah.
funding those is much harder rather than the other plays.
I see a lot of investors were looking to the more sustainable businesses, which are more focused to the infrastructure, because this is where all the transactions are going to be. Mike, can we come back to the grant part? I
Yeah.
really would like maybe to dig deeper a bit into the grant process. So, for example, how long it takes, and is it really hard to apply for the grant, and how long it takes for the organization to approve this grant? What is important to know during this process?
Yeah, that's a really, really good question, man. The reality is, right, the grants fundraising process is really difficult. Let's be honest about it, right? It's
Okay.
really challenging, which is why we're in business, right? I think so many, let's say, Web3 projects, businesses, stereotypically, they are founded by a tech genius, someone that knows how to do the code, someone who knows how to build the tech. And maybe sometimes there's a few founders that are all tech aligned. That is great because they're going to build a strong product. But we're no longer in the days of build your product and they will come, right? Like we said, the Web3 space now has millions of products, right? And so many of the products, so many of the projects are like copy paste of each other. And I'm not just talking about meme coins. I'm talking about wallets. I'm talking about infra projects. I'm talking about RWAs. It's much harder to find a project that is totally unique in its own concept, in what it's doing. And so, on that note, when you think about building, when you think about scaling, if you're a project, what do you need? You need to somehow have the strongest team behind you in order to succeed. So, if you think about on that note, but if your team is heavily based on developers, which most of the projects are, then you need to focus on sales, you need to focus on marketing, you need to focus on so many other plays than just developing your product. And this is where the grant process works beautifully. The way we do it at Web3 Growth Hub is we work with our projects over a 1 year period. We do a 1 year campaign, and in the first 2 months, what we do is we submit around 10 to 15 grants for them across different ecosystems. And this is again the hard part. You need to know which ecosystems are actually funding, number one, because some of them say they're funding, but they're not funding.
Yeah.
So
Yeah.
you need to know which ones are funding. You need to also know what type of grants they're funding, because if you apply to, let's say, Polygon, they're trying to fundraise for gaming, you're dead. Like, you're not going to raise, they might say they're raising for gaming, but you need to know what's going on the inside and understand they're not actually raising for gaming. They're actually raising for infrastructure, and they're raising for stable coins. So again, you need to understand which ecosystems are raising for which grants. And then, in all honesty, Darius, it's a business development process. You need to put in a lot of stuff at the top so that something comes out at the bottom. When we fundraise for our projects, we can't promise that we're going to raise the capital. That's out of our hands, right? But what we can do is we can say, look, we're going to do at least 10 to 15 applications. Off the back of that, you're going to get some conversations, you're going to get some meetings, you're going to get some engagements. And off the back of that, you're going to raise something. Stereotypically, what we see is we see the projects, they raise maybe 2 to 500,000 across, 10 to 15 grants, which is great. It's great capital unlock. It's great ecosystem unlock. But I think on top of that, when you look at the grant process, there's more to it. One of the big things that we do is, again, trying to raise the profile of the project, because if the profile of the project is more attractive, the foundations want to invest. If the foundations want to invest, you can get more revenue. If you can get more revenue, you can raise through VCs, etc. Right? So how do you make the project's profile more attractive? One of the biggest ways we do it is we help our projects to run side events during the main conferences. And number two, we get them plugged into the main conferences. So for example, we've become ambassadors Paris Blockchain Week this year, right? In April. And what we're doing is we're introducing all of our projects into Paris Blockchain Week, because they have a really great startup pitch competition where there's going to be hundreds and thousands of people watching. There's going to be VCs in the room. There's going to be enterprise players in the room. So when we look at the grant process is one angle of it. The other angle is, how do we unlock more opportunities? How do we unlock more BD opportunities? Because those are going to bring real revenue coming into the project. So that's the aim of the game, right? The grants is like the first domino of a big domino chain. So you tip that one first, and then everything else starts unlocking.
Okay. And just for example, Hedera, for example, if I will receive a grant, how supportive they are later on, basically helping me to connect with other companies, as I was mentioning about the B2B connections.
Every ecosystem is so different. And what we've noticed with the foundations is that they will a lot of times give an initial grant of maybe 100 grand, 200K, 50K, something, almost as a test. They kind of go, okay, Darius, I'm going to give you 100K, and I want you to get to this level within your project. It's like a test. It's like an audition almost. And then as a project you will build, you will get to that level, those KPIs, whatever they might be. And when they see that you've unlocked that level, then they're really willing to push your project, right? They're really willing to unlock you. They obviously need to see that you can deliver on the promises that you're making before they really push the floodgates. We've had one project in Aptos where they got an initial grant into Aptos for just under 100K. I think it was 80 grand, 90 grand. And now they're talking to Aptos for a second grant, and this second grant is for 1.2 mil. The big thing that I say to people, Darius, is this, right? For you to unlock the opportunities in the room, you need to be in the room. And the simplest way to get in the room with the foundations or with the ecosystem in blockchain is the foundations, because the foundations is literally the initial entry point to have that conversation. I talk to project founders and builders where sometimes they've built some amazing ecosystems like Solana, Ethereum, and I ask them, I say, wow, so you're in these incredible ecosystems. I know for a fact that Solana does amazing grants. BNB, they do amazing grants. And I say to them, so did you get a grant through this process? They went, oh, we didn't even think about it. Or maybe we didn't even have time to do it, right? It blows my mind that they did all the hard work of building on that ecosystem, building on that chain, without very little support, right? So I think that's a huge win behind the grants process.
So this is very useful knowledge what you have. I think grants is like really massive opportunity, and especially when you said that it's possible to get even 1.5 million of grant. it's amazing. To me, it's like amazing opportunity.
I think one of the big things, right? One of the big things with the grants is understanding what you're offering that chain and that ecosystem. It's the typical entrepreneur mindset, right? It's like, oh, this is my business. This is how great I am. This is what I'm doing. This is how I'm changing the world. Okay, nobody cares about that until they understand the impact you're going to have for them. And I think on the ecosystems, it's the same thing. I think the reason we're successful with our grants is because we come from a traditional fundraising background. So we pitch the projects in a way where we understand what the foundations want to see in order to be interested. I mean, sure, they are interested in the narrative of a project, but they're not that interested. They're more interested in the concept of, okay, well, how much TVL are you bringing to us? How much community are you bringing to us? What makes your project different from another project, right? And so when you look at that process, one of the reasons we do, it's really interesting, right? You asked me earlier, like, how do the ecosystems support and what is their scrutiny, etc. Some of the ecosystems, like I'll give you an example, Arbitrum. Arbitrum is like a pain in the butt because they are so difficult to get a grant from, right? Because you can submit a proposal and they will ask you a million questions on the proposal. They really dig into the proposals. But the beautiful thing is, if they like the project and if they fund the project, they really deploy support behind the project to help it be successful. And then you've got other ecosystems where, they just kind of hand out 100K, 200K, and they're not that bothered. Not so much they're not that bothered, but their mandate is deploy capital, and so that's what they're doing. But the reasons we work with projects over a year, and I mean, just to give a heads up to anyone listening to this, I'd love to connect with anyone who's listening to this and maybe wants to go through the process. We charge, right? We charge for the full year campaign, and then we charge a commission off whatever we raise from the grants. But the reason we do that is because it takes a lot of effort and it takes a lot of work, the grant process. I'll give you an example. Let's say we do 12 grants for a project. The first 5 grants might be rejected, right? Very honestly, they might be rejected. But what we start to notice is we start to notice a bit of a pattern. They're being rejected because of this reason, because of that reason. So when we do the next wave of applications, we edit that so that it becomes more, not so much we change it, but we edit it so that it becomes more attractive to the foundations. And then we're able to unlock real opportunities. I think with the grants, there's a huge, I can't underestimate how big it is, but understanding what the foundations want and then understanding how to pitch that narrative. It's not about your project. It's not about being like, I'm the best project. I've got this, I've got that. There's so many projects that are so similar nowadays that actually seeing something that's really unique, like really genuinely unique, is very far and few. So what you're
Yeah.
trying to do is you're competing against many projects that are very similar, maybe in one way or the other. So why is an ecosystem going to fund your project? Well, they're going to fund your project because they see the benefit for themselves in funding your project, right? So it's really important to match that your narrative with what they want. And that's
Yeah,
the
exactly.
golden trick. That's the golden trick.
The key point, what many founders are missing before we go to raise capital or to get the grants, we are not doing their homeworks, because sometimes we can see gaming company going to the venture capital who invest only into layer ones, trying to push this idea to invest into gaming company. And this is a mistake, because you are not actually spend any time to review the thesis of investor, just to
Yes.
understand what we are looking for, and you're just missing out. But basically sending your pitch deck to somebody who don't care about your industry at all, or don't care about
Exactly.
your project at all.
Like, I'm not going to name any names, right? But we know for a fact that some of our competitors in the space, that's exactly what they do, right? They're connected to chains as well. I don't want to say being connected to chains it's massively valuable, right? The way we get funding tends to be through the ecosystems where we have a contact or where the project has a contact, but you still have to write the grant application, right? And again, a huge part of that process is knowing there's this grant available, there's this project available, match the narrative. And that takes a lot of research, that takes a lot of time, that takes a lot of due diligence. Whereas what a lot of other providers, let's say in the space, what they do is they get the blurb and they just send it out to everyone. And there's a hope that maybe something will come back. But the reality is, the space is so saturated now that if you don't have a good follow-up process, if you don't have an engagement strategy with the foundations, you never hear back on that proposal, right? It could be that it was a great blurb, it was exactly what they wanted, but you send it out to them, maybe they're at token 2049, maybe they're at consensus, maybe they're doing something that week, and then you just miss it. So the way we like to do it is, rather than doing it mass to everyone, we kind of sniper, right? We pick 10 to 15 really targeted opportunities. And then off the back of that, we know that we can chase those opportunities really well. And that tends to work much better.
I have one business idea, for people maybe who is thinking what to start. I thought maybe even good to build AI agent, which is able to screen all the foundations and just to check all the requirements and see, what kind of project might be good fit to them. And from another hand, startups can actually submit documentation. AI agent can review the information and make this match like Tinder like. You know what I
Yes,
mean? So
yes,
just basically
yeah.
a good idea. Why not?
Yeah, yeah, absolutely, absolutely. That would be a good use of AI agents.
Yeah. So who knows? Maybe we should start a new startup, and
There we
try to
go.
build it. Yeah. You were speaking about the revenue models a bit. What are the most popular, let's say, or the most efficient revenue models, what you can see nowadays?
Yeah, I think that the biggest understanding the concept of how most businesses in Web3 make money, it is through the transactions, right? It's through higher volumes, higher TVL, higher transactions, higher users. And so when you look at that concept, you need to think about, well, how do we impact that, right? Are we impacting that by growing the revenue, by growing the users, by growing the TVL? Are we impacting that by retaining the users, retaining the TVL, retaining the community? How do we impact that metric? Fundamentally, like when you think about the real world, let's say outside of Web3, businesses tend to make money one of two ways. They're either increasing their revenue or they're saving costs, right? And there's a lot of, amazing services within that fundamentally help in one of those two ways. They're either going to help you make more money or they're going to help you save costs in some way, shape, or form. And so when you think about Web3, it's very similar. It's more transactions, more utility, more TVL. So when you look at the concept of, again, what the product is offering, what they're doing, it's how does the product and service impact that? Going back to Tings, right? Tings, AI gaming, vibe coding. Vibe coding is a big thing in the market at the moment. Gaming is a huge narrative in the market. So why would a project have a game? Well, the reason they'd have a game is to retain the community. So again, they're willing to pay for that service. One of our other projects, a company called Indexing Co., they help the ecosystems and chains and wallets and high transaction volume businesses. They help them to index their data to understand how to be more impactful with that data. So again, that's a great product. It's a great service. It's B2B. So many businesses, when we sit down with them and we go, right, where do you make your money? Where does your money come from? It's a really hard question, right? How do you make your money? Where does your money come from? When they really, 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 really answer that question, it doesn't come from retail, right? It doesn't come from thousands of people buying your token. Actually, where it comes from is it comes through you doing a partnership maybe with a wealth manager, maybe you doing a partnership with a chain, maybe you doing a partnership with another player in the ecosystem, somehow offering them what you do, offering them your product and service. And together you increase the volume of transactions, you increase liquidity, and you increase the revenue. So it's what it is, to be honest, Darius, right? What I've noticed, it's really sitting down and asking yourself as a founder, where do we make money as a project, right? Who do we really make money from? And not, like I said, 9 times out of 10, it isn't retail. It's actually another business, but it's pivoting to think that way. And most founders are still thinking, oh, I'm going to raise, I'm going to get money through retail, ICO, private sale, I'm going to go on an exchange, etc., etc. But brother, you look at some of the exchanges, there's exchanges closing left, right, and center at the moment because they've run out of liquidity. So founders need to be more aware of that. So I think that's a really interesting concept at the moment, how Web3 is transitioning, because that, like I said, there's millions of projects at the moment, right? But when you look at the infra play, when you look at how those projects collaborate, when you look at how they really make revenue and how they add value, it's not connected. And that's the next step for Web3. Once those projects start connecting, once we start seeing the abundance of, business to business happening, then it goes to another level. Obviously, we're talking a little bit about, the markets at the moment. We're kind of seeing a bit of a bear market at the moment, right? And everyone's panicking. So many people are leaving the industry. There's like this crisis, right? I really genuinely, I think it's a good thing at the moment because I think that there was such a euphoria. Bitcoin broke 100K. We had projects making millions. We had meme coins going to the moon, right? But when you think about the actual usability of all of that and the utility, very low,
Yep.
right? And
Yep.
now it's a different structure, it's a different focus, it's a different build. And that's where the projects need to pivot so that they survive and that's so that they can continue thriving.
Where do you see the market in the upcoming 3 years, let's say from now? I'm just curious to understand, in your understanding, where the market is moving. Did you spot any specific trends?
Yeah, it's interesting. Last week, right, I was at Digital Assets Forum. I was hosting the conference. It's a big conference, enterprise level conference for Web3, for digital assets. I had the pleasure of last year hosting the same conference in Barcelona, the European Blockchain Convention. We're getting involved with Paris Blockchain Week in terms of being ambassadors with them. So we're getting involved in a lot of these conferences, right? And what we see with the conferences is, for example, Cardano. Cardano is sponsors for Digital Assets Forum. They're sponsors for Paris Blockchain Week, and they're chasing a narrative now of enterprise chain, right? And a lot of these chains, a lot of these ecosystems are chasing the narrative of enterprise level business, right? Why is that? The reason for that is because that is where the revenue is, that is where the users are, and that is where the utility is as well. So what we're seeing, I think, is a massive pivot how builders are choosing to build their business case and where their ideal customer profile is. So on that note, you see a big narrative on tokenization. All agree, right? RWA tokenizations is the next big thing. It's not necessarily about, for example, just tokenizing cars or tokenizing houses, or it's about tokenizing assets that actually generate revenue. So, for example, tokenizing stocks, right? Tokenizing bonds, tokenizing, financial instruments that actually give revenue, or tokenizing businesses. I've seen a really interesting project where they were tokenizing debt through asset lending, right? Through asset, finance lending. And I think there is a huge case for blockchain. Fundamentally, is going to come down to, in terms of, let's say, tokenization, payments, any of these narratives, right? It's going to come down to like the holy trinity, right? Which is, can a product be quicker, cheaper, and more effective, right? Once blockchain proved that it can make certain industries quicker, better, and more effective, it's adopted in mass, right? I heard, for example, the head of MasterCard for blockchain talking at the previous conference, right? The head of Google as well, talking about how they're looking to implement blockchain, right? These guys are implementing the technology, but they're not implementing it from the perspective of, oh, Bitcoin is going to go to 150K. They're implementing it from the fact of, how is it going to make our business better? How is it going to make our processes cheaper? And how is it going to make our life more effective? And that's what they're looking for, the holy trinity.
Yeah, I agree. And from the technical perspective, I believe that majority of the big corporates in the world, we understand that it's time for them also to implement blockchain because, as you said, it's going to build businesses more effective, more efficient. But there is another side. I was also speaking with Web2 companies about that, and we said we love the idea of blockchain. We understand how to use it, how to implement it. And Web2 customers, unfortunately, we're not all of them, we understand the full concept. Governments and companies should also educate people on blockchain, explaining what is it, how it works, just to make sure that people understand. So I think educational part is also very important and people should be educated. And this is where I believe in 3 years from now, Web2 companies, Web3 companies should focus a lot.
I agree, and I partly disagree, right? I agree because I think in Web3, we make everything slightly more complicated than it needs to be because it makes maybe us sound cool, it makes us sound intelligent, it makes the whole thing sound interesting. What the hell is a token? Like, what is token? Why do we call it tokens? A token is a share of a project or a business, and for that share to hold any value, that project or business needs to be making revenue. But a token is fundamentally a share. And I think so many people, right? eToro, this is where what I'm going to say kind of changed my perspective. eToro, the trading platform, they blew up. And I remember I met the head of marketing for eToro a couple of years ago at a conference, and I asked him, what was the key thing? What was the number one pivotal thing that made eToro blow up? Like, why did you guys get so many users? Why did you do so well? And what he said was, you know what? People don't want to know how to trade the stock market. People don't want to understand how it works. What they want is they want the benefit of being able to trade the stock market. So when eToro created their copy paste offering, where basically I could choose certain traders. I could look at their portfolio. I could look at their profile, and I could just go, you know what? I can see that Darius over the last 5 years as a trader, he's been having 30, 50% gains every year. I'm just going to copy paste his trades. So whatever trades Darius does, I want them as well. And when they implemented that simple mechanism, that was when they got millions of users. And I think when it comes to blockchain, fundamentally, I know this sounds crazy and maybe this goes against the ethos of Web3. Fundamentally, the everyday person doesn't care about how blockchain works, right? We care about it because we live it, we breathe it, we bleed it, we talk about it every day. But the industry of Web3 is actually a very small industry in comparison to other industries, right? And it sounds crazy me saying this, but the reality is most of the world doesn't care about how blockchain or crypto works. What they want to know is they want to know that it's going to benefit them in some way, shape, or form. For example, emailing, or the internet. I would say most people that use the email, me, you, maybe other people listening to this, we don't care how it works. We don't even know how it works, right? But we care that it enables us to have quick communication. We care that it enables us to access data quickly online. We care about those things, right? We don't care
Yeah.
whether it's email, whether it's internet, whatever it is. And I think
Yeah.
crypto blockchain is very similar. The average everyday person does not care. But what they do care about is the benefit that that's going to impact them on. There is a level of education. Yes, people need to be educated in terms of crypto, understanding it, building trust, etc. But in terms of the benefit for them, for me, a lot of it is about thinking, well, what do people care about? They care about maybe having shelter, they care about food, they care about being able to improve their lives by making money, they care about their family, things like that, right? So how do we benefit that? You look at PayPal. PayPal by Elon was such a basic and simple idea. It was just the ability for me to be able to send money to you via email. Simple idea, but it benefited and impacted so many millions of people.
But in the same time, what I really meant that the user experiences really needs to be user friendly. Just imagine you going to the guy who is like 50 years old. He had no business with blockchain at all, and you will tell him that please open the wallet and please, generate this like address where I can send you the money. This person might be like so confused what to do next. And
Yes.
at least in my country, there are a bunch of people who are saying that we've been scammed. Somebody was offering to invest into crypto. We invested some fiat money and the money disappeared. So I think in this industry, people should be more educated. And this is
Yes.
how later on we will be able to involve more people into that business.
I think, one really interesting point on this, Darius, right, is you look at these major conferences, right? And this is something we're doing with a lot of our projects, right? During the major conferences, there's a huge opportunity to integrate with the Web3 community, to run an event, bring them to your project, educate them on your project. Amazing. But there's also an amazing opportunity for you to interact with people outside of the Web3 space. I'll give an example. Token 2049 in Singapore is probably one of the best conferences on the planet to do this. Why? Because Singapore, when they run Token there, you get millions, hundreds and thousands of people coming in the Web3 world from all over the world into Singapore. But you also get millions of people from the F1 world, because when they do Token Singapore, they do it at the same weekend as the F1. I think in-person real life events, they offer a real opportunity to build trust, to get people to know about your product, to get them to like your product, and to, like you said, to create that bridge of education for the next wave, for the next generation. And for people that perhaps are not so in tuned with what Web3 is, right? One interesting thing, just to talk on what you said, right, with the wallets and bringing more people on chain, projects like, for example, Ton, really interesting. Ton have just recently rolled out with their wallet a new update where you can send Bitcoin in the Telegram wallet. And it's things like that that are going to be really useful, because Telegram already have, millions of users, right? Millions of users worldwide. And if just 20%, 30% of their users interact by using Bitcoin, by using maybe the TON token, etc., then it starts to bring a lot more people into the ecosystem.
This is a good example of Web2 conversion to Web3. The company like Telegram, we have a social aspect of the technology, and we're giving you the chance to communicate with other people. And this integration with wallets, it's an amazing example how Web2 company can become like Web3 company.
Imagine next, right? It sounds crazy, but imagine next WhatsApp or Facebook or Instagram enables you to set up a wallet. It sounds wild, right? But imagine they enable you to set up a wallet and you could send crypto back and forth to each. It creates a whole new economy, right? So it's really, really exciting. And that, I agree, the education is a big part of that. And also the adoption by these major, major players that already have users, already have a community, already have traction, and tapping into them.
Yeah, amazing. By the way, this is another good idea. Another business opportunity for us just to build the wallet system
That's
for
cool.
Instagram.
There you go. It's a great
Yeah,
idea. It's a really, really good idea, because you know why it's such an incredible idea? Because I think, someone that and we're going a little bit off the topic here, but you look at, for example, unlocking capital, right? And you look at what happened last year with the Solana meme summer, right? We saw this huge abundance, like explosion of meme tokens to the point where the president of the US created his own meme coin, right? And what it was so interesting is it proved that people, businesses, countries with a large enough community, a large enough following, they have the incredible once in a lifetime opportunity to raise capital off the back of that. And what I was a bit disappointed with when we saw this, for example, Kanye West, I can't remember the name of the token, but he launched a token. He raised millions, millions of dollars like within a few days. And then,
yeah,
like all of the meme tokens, eventually, it died. He rug pulled, whatever, it died, right? But what I was really disappointed with that whole exercise was that someone like Kanye or someone like the president or someone that has a genuine, strong community and perhaps business already outside of Web3, they can use the platform to raise a lot of capital. And actually, if they have a revenue model, like in real world, it could be merch, it could be singing songs, it could be running, whatever it is, right? Whatever the revenue model is in the real world, it actually creates a really nice financial ecosystem if they can just keep it together. And
yeah,
I think, for example, when you look at Instagram, and I think this is kind of where Ton is trying to go, they just don't have the same, let's say, the same audience as an Instagram or as a TikTok. But when those platforms, let's say Instagram, Facebook, TikTok, when they allow people to have their own wallet on crypto, all of a sudden you get hundreds of millions of people, influencers that have communities, that have influence, that actually could set up their own independent business model running totally decentralized. It'll be
yep,
interesting because those platforms are centralized, right? But how
yep.
that will unfold is interesting. Yeah. And again, when you think about that, right? When you think about that, that is a real useful practical case of how blockchain could be used.
Yep.
So that's the bridge I think many people are trying to figure out.
Yeah, amazing. I really loved this discussion. So many different angles we touched and interesting topics and even ideas we invented during the show. So hopefully it might be good thoughts for somebody who is watching this episode. Thank you, Mike, for joining this episode. I really appreciate your time. I'm really thankful for you that you was sharing so many interesting things during the show. And I hope for the audience who will be watching this episode, it's going to be so beneficial. So thank you very much one more time for joining. And I really wish you good luck with your business, what you do. And yeah, thanks a lot.
Thank you. Thank you so much. It was a pleasure being here. Listen, for anyone who would like to connect with me, I would love to connect with them on LinkedIn. Just reach out to me on LinkedIn, Michael Graham, Web3 Growth Hub, and it'd be my pleasure to have a conversation and see if we can help you maybe unlock some funding and unlock some ecosystems as well. And Darius, it was a pleasure being on the show. Thank you so much.
Thank you.